In today's weekly Forex forecast, we're talking about the DXY, the euro, the pound, the dollar versus the yen, and also the dollar versus the franc. All right, so let's go and get right into it, guys, not wasting any time. Looking at the DXY daily time frame first, and still a very range-bound market, still a very congested market down here in this 100.6 area. So we recently had FOMC. We did see the market dip below this area and clear out these recent lows. Okay, so we knew that liquidity was building below this area, as it always does. Same thing up here, right? And we saw the market come down here, capture that liquidity, and then hold above 100.6. So as we know, this has been a critical support here for the DXY going back to late 2023. So as of right now, guys, this is still just a very range-bound market. Now, you could look at the last couple of candles here on the daily chart and say that it doesn't look all that bullish, and I would have to agree with you. Okay, because right now we had on this candle right here on Wednesday during FOMC, we had the market holding above this, looking relatively bullish. Okay, the fact that it swept these lows and closed back above. However, at the same time on Thursday, we had this candle here move significantly higher and then reverse and close back down here right at key support. And once again today, the market is pressuring this level. Okay, so it does kind of look like the market maybe wants to break down and come down there and test that 99.6 area that we've talked about here in recent videos. And the reason for this, okay, there is justification for the DXY to move that low. And this is not saying that the market will move that low, but there is a technical reason for that. So if we look here at the price action since late 2023, you can see that off of these highs up here, okay, we have some symmetry here for the DXY that could point to a move down there toward 99.6, okay? So off of this low, this is a parallel level down here, off of this one up here across these highs. And markets love symmetry, okay? They love symmetry and they love to target liquidity. So we know that liquidity is building below these lows, okay, as we saw there on that FOMC candle. And the symmetry for this market is down here at 99.6 because that would complete this channel right here that we've seen. Now, it would also target this 2023 low back here. And again, knowing that liquidity builds below lows and above highs, and the markets seek liquidity, we know that this liquidity down here below this 2023 low could also come into play. Okay, so there's no guarantee of that yet, and we don't have a confirmed breakdown. So there's nothing to say right now that the DXY is going to come down here and flush this low back here and sweep that liquidity before moving higher. Okay, so keep that in mind. Even though I'm talking about that today, there is nothing confirmed to show that, or at least to show that it's likely. So if you are bearish on the US dollar right now or getting bearish, I think you've got to be really careful just because, again, the market is still holding below these lows. Okay, so technically it is still holding on to support here. So even though it does look like the market could break down and target this area down here, at the same time, we have the market holding on to support. So anybody shorting the US dollar right now is shorting into key support. Okay, so very important to understand. As of right now, guys, just a very range-bound market. But given the reason I just discussed, if we do see a sustained break below here, okay, a daily, and weekly close below this area, potentially next week, then that could open up this area down here. Now, as far as the bullish scenario, obviously, if the market can bounce off of this area and close back above areas like this up here, these recent closing prices, right around 101, if it can do that and close up here, then we're looking at that, move back here toward these highs, and then this area up around 102 becomes key resistance. Okay, so a very range-bound market right now, guys. Be careful with this one. If we do get the sustained break, though, below this area right around 100.6, then that could open up those lower targets, but there is no confirmation as of now. All right, so next up, let's take a look here at the EURUSD, which is breaking higher today on that dollar weakness. Now, for this market, okay, it is very messy through here. You can see where we did get a sweep of that late 2023 high back here. Okay, so once again, liquidity built above this high, market seek liquidity. That's what we saw right here. Now, we got the close back below. We had this NFP candle right here, retest 111.40 resistance, and then move lower toward our target down here at 110. So that was a nice little trade there. If you saw those videos, that was a nice idea. Now, from that point, it has been very messy because it's been very sideways. Okay, this price action through here has been difficult to read simply because you can see this right here. Okay, sellers held up this area through here. If you saw the last video I made on the euro, what I was talking about there was the potential. Okay, and I was talking about it through here. We had not yet had this candle right here. I was talking about the potential for a sweep of these highs up here into this region, followed by a rejection. And we got that there on that FOMC candle. However, we did not see any follow through. We saw follow through immediately here on Thursday, but the market rebounded quickly into this 111.40 area, okay? So again, very, very sideways. Now, if this week does close above this level up here, then we could have a bullish breakout on our hands next week. But again, you've got to be really careful with the DXY sitting right there at 100.6. That is the level that the US dollar index has to break down in order to send markets like the euro and the pound higher. Now, if we do get a bullish breakout from the euro, it becomes very clear where this market could target. Look, having been a trader for over 20 years, I know how difficult it can be to find a trustworthy broker. And that's why I'm excited to share with you the broker that I've trusted for 7 years now. I've even met them in person. So I would literally trust these guys with my life. And that is Blueberry Markets, where you can trade over 300 instruments in the Forex market, share CFDs, crypto CFDs, commodities, and also indices. Plus, they have 24/7 support, so no more waiting forever for replies. You can get help no matter where you live. And funding your account or withdrawing from your account is super easy and quick with options like MasterCard, Visa, bank transfers, and Skrill. But don't just take my word for it. They serve over 50,000 traders who can use platforms like MT4, MT5, and their web trader. And they have stellar reviews across sites like Trustpilot and Google. So click on the link at the top of this video or see the link in the description. And when you use my link, you are going to get a 30% deposit bonus. So if you deposit $10,000, they're going to give you $3,000 to trade with. With trusted support, hundreds of trading options, and unbeatable reviews, Blueberry Markets is the broker for you. So look back here to the 2023 high. We've got this high up here around 112.75 that, again, we know there's liquidity sitting above this. Okay, this was a very prominent high for this market to the point where if we do see it close up here convincingly, okay, and establish itself back above 111.40, then we could be looking at that move back here toward 112.75. And in my opinion, if we do see the euro head up here and the DXY down toward 99.6, then we probably see the euro sweep this area first before we see a rotation lower. Okay, very similar to what we got back here on that late 2023 high. All right. So I hope that helps, guys. Right now, very indecisive market, with it staying below these recent highs back here from August. But again, if we do see it establish itself above here this week, then we could see that 112.75 area targeted. Alternatively, if we see the euro close back below here, and like I said, the DXY can get above that 101 area. If we see those two things happen and the euro closes back down here sometime next week, then that, of course, would keep the market range bound. All right, another very sideways market here is the pound, which I will go ahead and change this back to support now that we are above this area. Okay, so these are the highs now that the pound has to hold above in order to stay constructive here. You can see that this area back here is the upper parallel that we've talked about off of these lows. Okay, so we've got these lows down here. We've got this diagonal off of these lows, and you can see a parallel level extended off of these highs comes in up here. Now, the idea that I talked about a couple of weeks ago was this right here on the daily. So you can see that we had a failure of this level on the daily. Okay, and again, I talk about this a lot, but look at these imbalances that built up. Okay, all of these through here, this is all an imbalance for the pound, inefficiencies in the market that tend to attract the price. Okay, price targets these areas. So notice this right here. The idea from a couple weeks ago was this close below, retest of 131, target was 130. Okay, and that played out, very nicely. Now the key to this, and we talked about this in the VIP group, but the key to this was the weekly chart. So if you look at this here on the weekly, okay, this candle on the weekly never closed below 131. Okay, so even though the daily broke down from this, you can see where the weekly held above 131, and we're getting the rally so far this week. Okay, so like the euro, same thing with the DXY. You can use all these markets in conjunction with one another. We've got this area up here around 135, maybe 134.80 for the pound, to where if the DXY is going to break below 100.6 to target 99.6, then we've got all these highs back here for the pound. Notice this high back here, and then this one here, and this one. Now, this is the weekly time frame, guys. We're going back to 2019, 2020. So these are very prominent highs through here to where this level lines up with that diagonal that we've talked about, okay? So this right here, if you'll notice, if we kind of scrunch this chart a little bit to see these highs and lows, you can see that we've got these two lows back here, and we've got this high up here. This is a descending parallel off of this one, okay? So this level lines up again right around 134.80, 135. That could be targeted here over the coming days if the DXY does break below support. That's important to understand. because right now, again, we don't have a confirmed breakdown from the DXY. But this market so far is moving higher. I certainly would not want to be shorting this through here. The only way this becomes a short, guys, in my opinion, is if we get a failure below this level, but more specifically, a weekly close below this. Because remember, the weekly chart right now is holding above this area, okay? So notice this right here. All right, you've got this high back here, you've got this closing price on the weekly. The market never closed below that 131 level on the weekly. So the only way this becomes a short is if we were to get a weekly close back below 131. And until that time, like I said, 134.50 up toward about 135 could come into play, especially if the DXY breaks down. So next up is the dollar yen, which I don't talk about too often. I don't really like trading this market too much. But you can see here recently, we talked about both of these trend lines when they occurred, or when the breakdowns occurred rather. So this shorter term trend line right here, you can see we had the breakdown through here, okay? And we also had off of this longer term trend line going all the way back to the start of 2022, we had this breakdown through here. We even had a little retest in this area. Now, at the moment, the dollar yen is trying to recover some lost ground. Okay, now specifically, what I would be watching for here is you can see that we have these lows right back here. All right, so we've got lows through here. This low was swept here on this recent candle during this week. And you can see where the market's trying to put in a bullish engulfing candle here on the weekly. Okay, now the key for the dollar yen to move higher is going to be to break back above levels like this right here at 144. Okay, and the reason for that is you can see here recently what this market has done is it has carved out closing prices right in this area. Okay, so key support back here, the market broke down, we got the close below, resistance through here, and resistance once again here on Thursday's candle. Okay, so if the dollar yen can close convincingly above 144 today, then we could see some more relief back here toward these inefficiencies, like up here around 146. All right, so notice these two candles right here. You know, we talk about this a lot on this channel, but notice this candle right here, you know, virtually no retrace, a very shallow retrace. This one up here, really no retrace at all, okay? There's also an imbalance up here from this candle, okay? So if we get a convincing close above 144 this week, then we could see some relief here for the dollar yen up there toward 146, potentially higher. But, you know, the bulls still have more work to do here, right? The market's sitting right there at key resistance. A close where the market is today would not cut it, guys. You know, 144.06, 144.10, things like that, that is not going to cut it. You need to see it closing up here convincingly, okay, to flip this area back here to new support next week. Until that time, the market is still below resistance, and we could just see a return to some of this support down here around 142, 142.50 next week, okay? So again, you know, the market does look like it's trying to you know, put in a little relief rally here, but it does still have more work to do, specifically clearing that 144 area to target 146 next week. And last up, I want to talk about the dollar franc, which again, it's not a market I talk about too often, kind of similar to the dollar yen, but I did want to mention this one just because I do think the technicals here are pretty interesting, where if we go, you know, in fact, I'm going to go to the monthly chart. It's a little easier to see here, but off of this very low from back here in 2015, you can see where the market is at a really critical level right now, down here around, let's see, 83.80, 83.60, somewhere in that area. The market's at a very critical level right now, which was support back here as well. Okay, so, you know, right now the market is sitting at a critical support level. However, we do know that the DXY is also kind of weighing on that key support level. So, you know, all important things to keep in mind here when you're looking at these markets. But I did want to talk about this one here just because I think that this is really important to understand when you're trying to time, you know, potential reversals, right? Because as a swing trader, what a lot of people tend to do is they tend to just look at the key support levels and they either buy at support or sell at resistance, right? And that can work. However, a better way to do it is to look for reclaims. And what I mean by that is you'll notice back here on the weekly, okay, we had this low from back here. And again, what I've said in this video, we know that liquidity builds below lows like this and above highs. Back here, perfect example. Look at this high right here. Liquidity built above it. Look what happened over here, okay? So you can see that, you know, this right here was a sweep of the liquidity that built below this low from back here, right around 85.60, okay? Now, this level served as resistance for a couple of weeks. We then got the close above. Notice what was tested as new support, and the market took off. So as a swing trader, if you are looking for very high probability setups, for me, this is my bread and butter setup. Something like this right here, right? Support back here, close below, resistance, sweep that liquidity below, reclaim it, and then retest. This is what I'm looking for right here to buy. Now, looking to the current price action, okay, we have the dollar franc moving down here once again below 85.60, okay? So we know that this is going to be a key area to watch. Even back here, notice how it served as support here on this weekly candle. So this is the level, in my opinion, that the dollar franc has to close above in order to reclaim it and potentially move higher towards some of these inefficiencies, up here, okay? So I'm not saying that this is a buy right now, especially with the DXY looking relatively weak at 100.6. What I'm saying is I know a lot of traders are going to be looking at this chart and seeing this range right here and thinking, okay, I'm going to go out and just automatically start buying down here. But in my opinion, you've got to be really careful with that because we've also got this low from back here that could get swept, especially if the DXY moves below 100.6 to target 99.6. Okay, so I'm showing you this because this is a better way, at least in my opinion, to trade swings in the market, all right? So the level to get above, specifically on the weekly chart, is going to be this area up here around 85.60. So clear these highs back here, get above 85.60 on the higher time frames, and we could have something back here towards some of these inefficiencies, right? Even back here, these candles, look, virtually no retrace, okay? No retrace through here. So if we do get the close above 85.60, of course, the DXY is going to have to help out these markets and get off of that key support level, which, obviously the DXY is just a barometer for US dollar strength. And really relies on these other currency pairs for direction. But regardless, guys, this is going to be the level, in my opinion, look back here even, right? Resistance here, support, okay? So this up here is the one that the dollar franc has to reclaim in order to start turning higher. This right here is not enough. This is just consolidation, congestion here at the swing lows or potential swing lows, but we don't have confirmation yet to turn this into a buy, at least not in my opinion, all right? So those are my thoughts on this one. I do think this market's at a really, interesting area here on the the monthly chart, down here toward like 83.40, 83.50. But again, the market has some more work to do here to really reclaim levels like 85.60 convincingly up here in order to turn this into a buy. Now, I'm going to leave you with this as well, where the market is trying to break out from a short-term trend line off of these recent highs. All right, so you can see that, this is a rather rough trend line here, just drawing it quickly for you guys to wrap up, because I know we're taking up a lot of time here with this video, but you can see that off of these highs here, right, the market is trying to break out here today. But in my opinion, a lot of times, this isn't quite enough to tell us that the market is turning. In my opinion, the better scenario would be to see the market, again, reclaim this area here on the weekly time frame. All right, so potentially trying to break out a little bit here, but we do need to see the DXY above 101. We also need to see this market above here on the weekly chart. Until that time, we do have the potential for this market to move lower and come down here and take out this range low. All right, but either way, guys, whatever happens down here, I think this is going to be one to watch just because you have this range that is built up here over the last, year and a half or so that could become really interesting here over the coming days. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 90% off lifetime access. See the link in the description of this video, or if you're on the website, click on that join VIP link. Have a great weekend, and I will talk to you again next week.